NIO reported a mixed first quarter. Revenue beat the market expectations. J.P. Morgan calls NIO's Q1 results clean beat during industry headwinds. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Growing Wealth and hit the bell icon, so you can get our videos in very first moments. Even your little help will really work for us to grow. Despite the challenges faced by global car companies due to chip shortages, the Chinese electric car company, NIO, still delivered Q1 results that exceeded expectations. In J.P. Morgan's view, that was a clean beat and a surprise. NIO's unaudited earnings report showed that its revenue for the first quarter was RMB 7.98 billion yuan, $1.22 billion, beating market expectations of 6.65 billion yuan, and up about 482% from a year ago. NIO's adjusted loss per ADS was RMB 0.23, a 75% reduction from RMB 0.93 in the fourth quarter. The company's gross margin was 19.5% in the first quarter, higher than 17.2% in the fourth quarter. Its vehicle margin was 21.2% in the first quarter, compared with a negative 7.4% in the same period last year. In a research note on Friday, J.P. Morgan analyst Nick Lai's team said, NIO surprisingly managed the industry headwinds well in the first quarter. The team wrote on a Friday note. Narratives at the company's Q1 2021 result call today, despite a clean beat, mostly surrounded two major industry headwinds, which not only sent China auto stocks down, but in some cases pressured the company's margins, for example Great Wall, BYD, SAIC. Number 1, chip shortages and production outlook, and number 2, profitability from here. In light of elevated material prices, production loss due to tight chip or battery supply, and heightened industry competition, NIO, surprisingly, has managed all these well in first quarter of 2021, with record high vehicle GPM 21.2% versus J.P. Morgan's earlier estimate of 17.3%, driven by content increases through high take rate for 100 kHw battery, and NIO pilot options and contained BOM bill of materials. The team said they will continue to look for signs of sequential improvement in chip supply, and expect the problem to be fully mitigated by the end of the year, or the first half of next year. The team said, before the problem is fully alleviated, the chip supply situation could change from the current shortage to a potential tight, and such an inflection point is likely to occur this summer. According to the team, if the scenario materializes, it should mark the bottom of the auto company's share price performance. In the long term, J.P. Morgan maintains a positive thesis on NIO, and expects the company to achieve 106% and 93% volume growth in 2021 and 2022, respectively. J.P. Morgan reiterated its overweight rating on NIO and its $70 price target, about 78% above the stock's Friday close of $39.84. NIO gained 2.18% to $39.84 on Friday trading. Don't forget, previously, according to J.P. Morgan Asset Management, Chinese electric vehicle EV startups NIO Incorporated and Axopeng are best placed to rival industry leader Tesla for global market share, because of their competitive technological advantages and strong shareholder support. Never mind that they may take years to earn their first dollars. Oliver Cox said, they have three key competitive advantages, namely significant production expertise, strong software integration skills, such as advanced driver assistance system, and strong backing. He cited Tencent Holdings and Meituan as their powerful financial backers. Competition for market share is heating up, as more than 500 players have entered the fray, with the industry on the cusp of a major growth spurt, including new entrants like smartphone maker Xiaomi Corporation. China recorded a 12% jump in EV sales to 1.17 million units in 2020, and sales almost doubled last quarter. As for UBS forecasts, electric car sales will reach 6.6 million in 2025 and 18 million by 2030. Oliver Cox co-manages the $1.22 billion Pacific Technology Fund, according to Bloomberg data, which has risen 89.4% over the past year. The fund added NIO and Axipun sometime between September 2020 and February this year, according to reports to fund holders, amounting to a combined 2.9% of its net assets. Shares of NIO and Axipun have risen by 1,168% and 122% respectively over the past 12 months. The MSCI World Automobile Index, which tracks 20 of the world major players, with $1.17 trillion of capitalization, advanced 137%. Oliver Cox added, "Look at all of our holdings on a range of valuation metrics, but specifically for companies which are loss-making, and investing heavily for growth in the future. What matters most are things like managerial execution, gauging product quality, how market share gains are trending, etc." He said, and these metrics, NIO and Axipun have been standout performers over the past 1 year. If you enjoyed this video, leave a comment below and please hit the like or share button, we'd really appreciate it.